Morning, everyone. Welcome to this morning's edition of the NPC Markets Morning Call. It's the 6th of August. My name's Mark Gardner, and stocks took a breather overnight, so near record highs. And we sort of saw Google get hit overnight as there's a little bit of a mass exodus of people or key staff at the top of their AI projects going to sort of, start their own AI project. The last time sort of this sort of happened was OpenAI, which ended up being Anthropic. So and given how behind Google is at the moment, their enterprise has been delayed, and their current professional model sits very much mid pack, and I don't think that bodes well. When people are leaving that and a project's behind, that there's obviously descent in the ranks, and it'll take them a little bit longer than expected to get that moving. Nvidia was up on as SpaceX yesterday said in their earnings that they were going to use exclusively Nvidia for their space data centers, which don't exist yet. But it's all fairly speculative, but SpaceX itself did not bode particularly well. I think falling around about 14% overnight, and we've got that massive release of stock tomorrow, which is the equivalent of 43% of what they sold in the float. So the free float goes from 4% up to about 11 or thereabouts. I might be, don't quote me on that. But yeah, it's a massive amount of shares coming onto the market tomorrow. And I think the employee shares lose that restriction around being only able to sell above up 30%. But yeah, just look, pretty mixed picture overall. It really did try early. I think, but AMD's report, was one of those things that really sort of dampened the mood a little bit. Drag back those semiconductor stocks just a touch, and then obviously the Google report as well. There's a story floating around on social media about Microsoft and that OpenAI is 70% of their AI business, and that's been in the market for a few days. I'm not entirely sure why it sort of came out overnight, particularly, and it sort of does make sense in a way. Given that they purposely set that partnership, but it obviously is something that, given where the market is back here at record highs at the moment, on the back of Microsoft's Azure numbers and Amazon's AWS numbers, and you've had Jeff Bezos sell $4 billion in personal shares yesterday, which he disclosed to the market and not give a reason, and that. It could be one of those things that if the market starts to turn a little bit nasty, that those earnings all of a sudden get dismissed and these stories sort of take over it. But at this point, I'd be, that's sort of fairly speculative on sentiment. Nikkei doing extraordinarily well this week, up 7% for the last 5 days. ASX doing really well as well, up another point, 1% yesterday. We saw a comeback in the likes of WiseTech and things, and everyone's been going into this earnings season fairly dour, and we've had some okay reporting so far. The only one I've sort of spotted, and we haven't got a lot of news on it just yet, is REA's revenue dropped about 20%. I don't know what the expectation was there. Sort of going to watch that, but AMP seems to have done quite well, launching a fresh 150 mil buyback and lifting their dividend. They were one of the stocks that got pretty belted last earnings season. So it might be a little bit different. We did do some stats on that. I'll get to that in a couple of minutes. But earnings overnight, Eli Lilly, Monjaro was up 91%. They raised their revenue guidance. Super high quality healthcare business that really faced a patent cliff, 5 or 6 years ago, and really lent quite hard into the digital twin thing, because they obviously needed a new pipeline of drugs. So they suffered quite a bit, and then it's essentially now have a jam-packed pipeline of new drugs and new treatments that are in late stage, and all of their competitors are now essentially having to do what they've already done 5 years ago, but they're going to be pretty hard to catch. I'm not surprised with the up 5 move. Disney was up 3.7. Not, that was fairly surprising. It's sort of can be quite volatile. AMD was down 7%. It wasn't horrible. We had Western Digital and the company they spun off, and I keep wanting to say SK Hynix, but the name sort of eludes me at the minute. But they reported really good earnings, both of them. SanDisk, sorry. They reported really good earnings and beat expectations pretty much across the board, but were off. But to give you some context, they were up, 2 to 3, 400%. I think SanDisk was up somewhere in, multi-100% for the year to date. Western Digital up around about 200. So this has sort of been doing the rounds. I did this on Ausbiz yesterday, and I'm done for the newsy as well. But the risk reward for ASX earnings, based on the last couple of earnings season, but this particularly the stats from last one. Your best upside on the day when people beat was around about up 13. Your worst downside, I think was 34%, and your average was probably around, some of those disappointments was around about the 20 mark. Which, basically saying that there is really no point in being too predictive leading in, and if you actually go and do your own research, do the work, and have some patience with some of those good laggards and buy the turnaround, you actually did better over the 6-month period. So the laggards with over a 20% drop, and ended up being, over the course of the 6 months, 7 times better than buying momentum with the winners. Temple and Webster was kind of the exception, but these stats were done at the start of the week. I think Temple and Webster was up about 12% yesterday, but still down. Don't get me wrong. AMP up 71, Zip up 55, PMA up 39. They were 3 names that had big recoveries. So, but you can sort of see though that they were still down. The laggards were still down a good 7.5% odd. It really does pay to have a fair bit of patience, and look, let's face it, it's a lot less stressful not having to be predictive and chase your tails. So when the stats are telling you to just wait and make sure the market digests and take your time in making your selections, well, that's a really good opportunity, not only from a headspace standpoint, but from good investment decision making standpoint. You're not having to roll the dice. So yeah, but we've got, as I said, REA and AMP this morning. I've really only got what's come out for REA off the Fin review this morning. They can be quite negative. I'm not going to make a call on what the what the reaction is going to be necessarily. I think that it would warrant further research and further looking into the numbers. We've got a couple of the big four, at least, well, 3 of the big four next week in terms of earnings. Westpac, CBA Wednesday, ANZ Thursday, and NABS the following Monday. But we really do get in the thick of it, more so week 3 and week 4 overall. So you can go to mpcinvest.co/ASX earnings, and this is a fully interactive calendar. We've vetted it over the AFR's calendar, CMC markets, Bell Potter, market index, and combine them all up to try and get the best guess, because obviously some of these companies haven't actually announced what date they're doing earnings, so it is best guess. That's the disclaimer. And yeah, if you hover over these names, you'll get the expectations on the numbers leading in. And if you hover over the little plus signs, you get all the other smaller cap companies, because obviously we can't fit 30 logos into one thing. For the rest of the week, we don't have a lot. We've got ResMed should be out as well. We had Block, I think, which reported after the bell in the US, and was up. It was pinging around, but it was up around about 4% at one stage. It beat marginally across everything. across most of the metrics. I think it's now, I'm just having a look now, as 9.29, it finished down about 1%. So not much in that in terms of market reaction for the tech sector today. I would say that we should or very much could, for the likes of Xero, WiseTech, and etc. We're not going to see any SaaSpocalypse affect earnings anytime soon. Certainly not this earnings. So you would expect that there could be some potential upside in some of those software names as we come into earnings, because they've been pretty beaten down. Probably definitely not going back to all-time highs, but certainly not sitting at prices that justify their quality at the moment. Gold, silver, back in the news. And it was a bit funny. We were talking about this in the office yesterday, and Finn brought it up, saying the chart looked really good, and hadn't really been much in terms of news out there about it. And then all of a sudden, I came in this morning and there was 5 or 6 news stories about how gold's going to turn around, etc. We were looking as well, this critical minerals trade, lithium. Obviously making a little bit of a bounce back, some rare earths as well. That REMX ETF in the States looks pretty, looks at good levels and pretty handy, and that's still down 50% from its highs. We had, I think, United States Antimony took off last night. It was one of the better performers overall. And you've got your, the likes of MP Materials and things also sort of, heading higher as well. So some signs of life in that sector. Albemarle did report earnings and beat both top and bottom lines. Aftermarket didn't really rally a huge amount, if at all, to be honest. But there is, we're starting to see signs of life in that sector. Particularly, we sort of had that feeling around the biotech, which JT spotted about probably 5 or 6 months ago, and we starting to see those green shoots turn into something material now, with the likes of Neuron up about 17 or 18% yesterday, as well as they got through, had some really positive announcements. I think CU6 was also one of the best performers yesterday on the ASX. We went through the volatility in the chip sector on the podcast last Friday, episode 130. Go to mpcmarkets.com.au/podcast, or scan the code, or just search for MPC Markets or Bulls versus Bears on your favorite podcast platform: Spotify, YouTube, Apple Podcasts, iHeartRadio, blah, 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 blah. And for those of you looking for income and are sophisticated investors, as 708 qualified, we do have a couple of fixed coupon notes in the income series coming up, which will close this week. Probably Friday, potentially Monday. We're sort of seeing a bit of a kick up in demand. We'll have one on the banks, ASX banks. It'll be 3 of the big 4 plus Macquarie likely, and around about, probably more so towards the 10% mark. And we've got one as well on CSL, Goodman Group, and Net Wealth, which all have taken a bit of a tumble in recent times. And that's looking around about the 12.5 to 13% per annum mark. Coupons paid quarterly into your bank account over 2 years, but early exit from 6 months. And as long as they don't end up down 40% in 2 years' time, you just get your coupons and your capital handed back. But the coupons get paid no matter what over the course of the investment. But they're really good products, and in a market that's struggling for dividends at the moment. And even when you can get dividends, it's giving it away in capital losses across the board in the ASX. These are a great alternative to get some regular income that is not 6 monthly, but it's at least quarterly. And the banks one actually does pay monthly as well. Really good alternative, particularly if you've had hybrids in the past. They're pretty same but different. Sort of similar characteristics, but go to that mpcmarkets.com.au/income, have a look, watch the explainer videos, etc., and inquire today. We do run these pretty regularly, So, despite these closing this week, there is usually one every month or two, particularly in the banks, to get people started. But have a, enjoy the record highs, people, and keep yourself, remain patient over this ASX earnings season. I think the SPY was down around about nine points. Not much to write home about. And we'll speak again tomorrow.